Knowing the income tax slabs can help you to plan your finances and taxes better. Once you know which tax slab you fall in, you can plan your deductions, investments and expenses in a way to maximize your tax savings. Today's video will take you through the tax slab rates under both the old tax regime as well as the new tax regime for financial year 2023-24 and onwards. We'll also see how to calculate your income tax as per the tax slabs. So, let's begin. Before we look at the slab rates, you must know from financial year 2023-24 onwards, the new tax regime is the default one, which means if you want to select the old tax regime, you'll have to explicitly mention it to your employer. Otherwise, your employer will deduct taxes on your salary as per the new tax regime. Now, very quickly, let's touch upon the major difference between the old and the new tax regime. So, the old tax regime is the one which allows you to claim exemptions and tax deductions. Some common ones are deductions for various investments and expenses under Section 80C, deductions related to medical insurance under Section 80D, deductions on home loan interest payments, house rent allowance, and leave travel allowance. The new income tax regime, on the other hand, was introduced by the government in 2020. It does not allow most deductions and exemptions which are available under the old regime, but it allows some deductions such as standard deduction for salaried, pensioners and family pensioners, employer's contribution to NPS under Section 80 CCD2, deduction for interest paid on housing loans taken for a rented out property, and Agniveer's contribution to Agniveer Corpus Fund. Now, let's take a look at the tax slab rates under both the regimes. It will help you to calculate your tax under both the regimes and compare. So, let's look at the tax-free income first. If your taxable income, that is income after taking out the deductions and exemptions under the old regime, is up to 5,50,000 rupees, you'll not have to pay any taxes. Moving on to the new regime, taxable income up to 7,50,000 rupees is tax-free. But if your income after taking out deductions and exemptions exceeds this tax-free limit, you'll have to pay taxes as per the tax slab rates. So, let's move on to look at the slab rates under both the regimes. Look at the table on your screen. We'll discuss the tax rates for someone who is below 60 years of age under the old regime. So, there is no tax on the initial 2.5 lakh rupees of your taxable income. Next, for the income falling in the slab of 2.5 lakh rupees to 5 lakh rupees, there is 5% tax. Easy to understand? Similarly, for the next slab of income between 5 lakh rupees and 10 lakh rupees, you'll have to pay a tax of 20%. And any income above 10 lakh will be taxed at 30%. Likewise, you can see the tax slab and rates for senior citizens and super senior citizens on your screen. Moving on to the new tax regime. There is no tax on income up to 3 lakh rupees. Then, for the next 3 lakh rupees of your taxable income, you'll have to pay 5% tax. Next, for income falling between 6 lakh rupees and 9 lakh rupees, you'll pay 10% tax. For income between 9 lakh rupees and 12 lakh rupees, you'll pay 15% tax. Similarly, for income between 12 lakh and 15 lakh, the tax rate is 20%, and any income above 15 lakh rupees will be taxed at the highest rate of 30%. The tax slabs are same for all age groups under the new regime. Once you know the tax slab rates, let's move on to see how income tax is calculated. Now, income tax is calculated as per progressive tax method, which means as your income increases, the tax on the incremental or the additional income also rises. Let's understand this with an example. Before we start, you must know we are not comparing old and new tax regimes here. We are simply going to learn the calculation part of how income tax is computed. So, assuming Ria's taxable income, that is income after taking out all the deductions, is 20 lakh rupees. Here, initial 2,50,000 of Ria's income is tax-free. So, out of 20 lakh taxable income, we can take out the initial 2,50,000 of income. Now, the next slab of income from 2,50,000 to 5 lakh is taxed at 5%. So it comes out to be 12,500 rupees. Now from 20 lakh, we have already computed tax on the income worth 5 lakh rupees. So from 20 lakh income, we can take out 5 lakh. Remaining income is 15 lakh rupees. The next 5 lakh of Ria's income, which is falling between the next income slab of 5 lakh and 10 lakh, will be taxed at 20%. It comes out to be 1 lakh rupees. Now, remaining 10 lakh rupees of Ria's income will fall under the highest tax bracket and will be taxed at 30%. So 30% of 10 lakh is 3 lakh rupees. Add the marginal tax under all slabs. As you can see on your screens, it comes out to 4,12,500 rupees. Now calculate health and education cess at the rate of 4% of this tax amount and add to the tax. So we get 4,29,000 rupees as total tax liability. So Ria has to pay a total tax of 4,29,000 rupees for the financial year. The tax calculation method is the same under the new regime as well. To keep it simple for explanation purposes, let's assume taxable income is same 20 lakh rupees. You can calculate the tax as per the same progressive method. See the table on your screen for the calculation.